Hello, hello, hello. Mic test, mic test, mic test. Hello, hello, hello. Mic test. So, hello guys, and welcome to our 140th edition of the Trading Opportunities webinar. And this is your host Neerav. Before we begin with the webinar, let me just very quick. We'll give a introduction. So, this is a weekly series. So, we conduct these webinars every Friday, generally at 2 p.m. GMT, or otherwise, if not possible, then at 4:30 p.m. GMT. This is 148th edition. In the last 138 webinars so far, we have captured a total of 349 trades, right? That includes trades on crude, gold, S&P Nifty, etc., which which we have been discussing over all these months. What happened in the last webinar's discussion, or what happened off our discussion, we will today see in this 148th edition, right? And apart from all this weekly webinar series, you can also check out my video course if you are interested in learning the basic to intermediate concepts on Elliott Wave. It's called Complete Guide to Professional Trading with Elliott Wave. It has 1600 plus students, etc. Just check it by clicking this link over here. And those of you who are already familiar with the basic concepts and want to go from intermediate to advanced, you can check my book, available on Amazon as an electronic copy via Kindle. So you will get instant access. Just type in the name or use the direct links here, whatever, right? And lastly, those of you who are enjoying the content and would like to see more of it, you can request details for Slack group here. We have a private group here which you can access in case you are eligible for it. So just check the in or make the inquiry here. And before we proceed, I always like to show off my what do you call, old record. It's getting very old. But anyways, we have a 6 years plus consecutive accuracy record of all the public webinars and videos which have been uploaded on YouTube. And as you can see, it has stayed above 80% plus for all these years consecutively, which is much higher than industry standard, as you guys already know. And after this year, we have been starting doing this webinar series, which you are currently a member of. And lastly, this is the way we'll proceed. We'll start with the Euro, Crude Oil, Gold, S&P, and Nifty. I'm not covering BTC these days, unless I see something very interesting. Yeah, I saw the takeout of the upside, but I think it still is not very interesting for me to cover. So I'll just leave it. Right. Anyways, so that's about it for the introduction. And before we proceed with the chart of Euro USD, let me just show you what we discussed in the last webinar. And obviously, let me know if you are able to listen to me. So, so first of all, this is the last webinar discussion on Euro. Let me zoom into the chart and see what we were discussing, or what was the plan or setup, etc. So this webinar was, or 139th webinar was conducted on the 1st of November, and the setup we were discussing was ABC. There were two possibilities. I can actually probably see it here. So there was the possibility that this C leg down is either complete here, and second was that it is still continuing lower. And both of these was possible. I did discuss possible entry setups specifically for the bearish side or the downside movement, because that was the more what do you call, likely scenario here. And it's so far it looks like, and this is live chart. And good morning to you, Louis. Good evening to you, Raghu. Good evening, Ajit Singh. And thank you for the confirmation, Raghu, about the audio as well as the video. And hello at you, at our newest member in the Slack group. Emmanuel, hi. So with all these messages, let's continue with our discussion of euro. So what I'm saying is that we discussed two setups. The date was 1st of November, where it is there. It is 1st of November was the date. So our one clear setup was that below this low, we will look for short entries. So it did get triggered. So I'll just show you very quickly on our Slack group where it is euro. Uh, where have I taken the entry? That's what I wanted to show you. Added minor shorts as wave 3 for impulse down expected. So our entry is around 1.07083, right? Not a very fast entry, a late entry actually, 7083. So I think we are still not in profit. But if I had been on the system, perhaps I would have taken a better entry. But anyways, the trade still continues. There is still no issue with the trade, so we don't really care. What's the setup? Let's see the setup. The setup is from this point of reference. By the way, if you are looking for the high time frame analysis, keep in mind that the high time frame analysis can be checked in our last to last webinar. I have discussed it in quite some detail. So instead of wasting our time, I will probably touch it here. But instead of going into much detail, you can just check these webinars. They are, after all, valuable content. Instead of wasting everybody's or humanity's time over and over about talking about the same thing, it's better to you refer that. So anyways, our setup now becomes this. So actually, I'm more of thinking of it in alignment with an impulse down. So in Elliott Wave terminologies, an impulse down is a structure which looks roughly, very roughly speaking, like this. So here we have the possibility that this is the third, and if that really is the third, then that's good for us, because generally the wave third is the fastest in the whole series, right? Now, if that is the third, then we don't have to do anything. We just have to trail our stop losses once this low is taken out, which is the level of 1.06808. I'll trail the stop loss to 1.080, roughly speaking, and so on and so forth. We will try and see as how far we can go. So that's the scenario which is in our favor. Let's just discuss the counter scenario. And by the way, while we are discussing the scenario in our favor, here's the minimum target we are expecting is 1.06378. Nothing fancy, just the trend line support. 1 second, let me check it. 1.064. I'm just typing in the rough level. Just draw the trend lines at your own end and figure out your own targets. Obviously, keep in mind that we are using this specific data feed. If you are using a different one, then the levels, targets, etc. will be different, right? So that's all what do you call green or things in our favor. Let's just discuss the things that may happen if things don't go as we expected them to here, right? So the second scenario will be, let me just draw these trend lines. Let's just go with yellow color here. Second scenario is that focus on the yellow drawings now. So from this point of reference, we have a wave a B, and the C is possibly already complete. Now that is very low probability. I do not think the C is complete. So the higher probability is that C is still continuing. But the problem now arises. The problem is that in a ABC progression, the C will generally stop at the trend line support. So that basically means our minimum target, which is roughly around this level, may as well be the end of the whole move, and the market can just form a smaller impulse or just diagonal structure. It doesn't really matter which structure it forms. The issue is that in case of an ABC, we probably won't see much of a movement. And since my entry was kind of late, I probably won't get much of a risk to reward out of this trade. That is, I risked more and got less out of it. But that's life. Happens time to time to time, right? So that's just something we need to be mindful of at this point in time. The counter scenario. Of course, if things work out for us, then the first thing will be market trading below this trend line. So that will be the indication that we have possibly more downside incoming for this counter, right? So minimum is all we care for. I think we may have some downside targets set already. Let's see. I would I mean, these are pretty normal targets. Support incoming here, support at 1.0609. Let's leave it for next webinar, and of course, I'll update in the Slack group as new targets become available based on my short-term analysis. Don't want to discuss too much here. If you guys have any doubts or questions based on the analysis we have done so far, just let me know in the live chat, and I'll take a few moments here to see if there is any questions, and if not, then we'll move over to our next chart of crude oil. So here is the recording from the last webinar, which we conducted on 1st of this month. And let's very quickly look at the chart of crude oil and see what was being discussed here. One second. So in crude oil, we were discussing a higher time frame analysis, right? And we were expecting more or less bearish movement, but we did not have the incoming signal for it. Let's move the chart a little bit further. You can see I'm putting out some bearish counts and drawing some bearish scenarios on the right hand side. We are basically talking about a complex or double zigzag WXY correction, which in elite wave terminologies means that the wave Y will take out the low of the wave W and give us leg down, just like this rough structure on the right hand side. That was the main theme which we discussed in the last webinar. And of course, there must be some other points, setup 66 lower, etc., which we may have discussed. So kind of the count still remains the same. I have not done any major changes here apart from getting into more detail on the structure of the W's and X's. And one second, here I have, yes, so here I have deciphered this complex count as possible. One second. Again, keep in mind, this is just a possibility. I'm not saying this is how it's going to go. There are many other scenarios. What we are basically expecting is that we are seeing something like this. Something like this basically means a leg down, correction sideways or a little bit to the upside, correction sideways or a little bit to the upside, and then another leg down. So my understanding is that if this correction sideways or a little bit to the upside is over, let's call them dot A and dot B, then we will soon see a leg down for dot C. So basically, the count still remains the same. Still a wait and watch, and keep in mind, I'm observing it on a daily time frame. I'm not very interested on the shorter time frame right now, and will be interested as soon as we start seeing a move below 68.10. It is not an entry trigger or anything. It's just a alert below this level. I will be interested in shorts. Probably take some scalp shots, but the idea remains the same. We are focusing on the wave Y. It is also possible that the placement of X is incorrect or the hypothesis on X is incorrect and the Y wave is already in play. So this leg down is not part of this subdivision, but instead the whole count itself. So in which case it will look something like let's say if this is the X, then it will be just the Y. So long story short, we are bearish. We just discussed two scenarios. One is a very detailed complex scenario where we have one leg down. Let me represent that by yellow counts. One leg down, correction a little bit up, and then another leg down. For the wave Y, let's call that as our H1, suggesting downward movement followed by upward movement and another downward movement. And the second scenario is H2, which is suggesting straight down movement. So basically, long story short, I am biased to the downside. However, I have not taken any trades or entries. I'm waiting for the market to move below this marked level. Only then I'll be interested. And generally, if you have noticed, I generally do not go to these very high time frame charts. Uh, but I am here on a very high time frame because I think more clarity is required. So wait and watch for this counter. Nothing much to add here. So without wasting any more time, let's head over to our next chart of gold, which I believe most of you guys are interested in anyways. I'll wait a few moments here before we start discussion. So if you have any doubts or questions, you can put them in the live chat and I can answer. And by the way, I'm going a little bit faster than normal. So let me know if the pace is fine, if you're understanding everything. And otherwise, I'll just reduce the pace a little bit. So here we are on the last discussion of gold, which was done last webinar on the 1st of this month, 1st of November. Let's see what was being said. And I'm, as you can see, pointing out to a possibility of one more leg down, which would then complete a possible A, B, C down zigzag count. And once the zigzag is complete, then we will possibly look for some upside movement. Pace is spot on. Thank you, Jeffrey, for letting me know. And what about the other guys who are live in the chat but not participating? And anyways, getting back to the discussion, what I'm saying is that if this is the count, A, B, C down is the count, then leg C is in play, or leg C is what we look for, right? I guess that's all I discussed. Or maybe there was, of course, there was more. And some more detailed blah blah blah, and this is the entry level of 2742, whatever. Anyway, so that was the discussion from last week. Let's now head over to our current chart and see how things have progressed. So first of all, let's check where was 1st November. 1st November was here. So of course, this was the rough drawing you were seeing, genius handiwork in arts. And this was the rough illustration from our last webinar. I was suggesting this leg down is going to come in play. It of course did come into play, and actually it was much faster than expected. I first, when the election results came in, I first thought that this may be the end. Of course, this B is here, not as simple as we expected it to, but anyways, that's generally something we already know about wave Bs, their deceptive nature. Anyways, what I was thinking was maybe this is the end of the C, and the idea was that either this is a C complete here, or we can see a continuation of the correction as a double zigzag. But instead, the market just went down, dragging it lower and lower and lower with a very clear subwave structure. Let me just show you what I mean here, zooming in. So if we count it from here, we can see a wave 1 here, 2 here. This yellow color will be better here, I think. And 3 here, and then the 4 and the 5. So I'm not going to count it in very much detail. We are on the 1 hour. I know the 4 looks odd, but I know where it is. I've checked it on many different time frames. Long story short, it is a very clear subdivision with the wave 3 as the largest, obviously, and following some good ratios, etc., etc. Actually, I haven't checked the ratios, but I'm guessing it is following just by the way it looks. And that just means that the C is super extended. If this is the A, this is the B, the C is super extended. Now that is a reason for caution. Generally, we don't expect the C to be this fast and extended. Generally, that could suggest that this market may be probably doing something else. So hence, I have now also pointed out, it's already posted in our private Slack group. All members are already aware of this hypothesis. So what I am assuming is that from this point of reference of the price level of 1808, if we consider this as a starting point of our analysis, we have what we can call 1 here, 2 here. Actually, let me just recheck again. And 3 is possibly complete over here. And that is a cause for concern, because if 3 is complete here, then we may see a break of this strong bull trend, or not a break, what do you call, sideways movement from this strong bull trend, which can take this market lower to this mark level of 2595. And what is this? 2477. So leaving all that analysis aside, 2595 is here, right? So if that is the case, this market can go quite lower, as you can see, right? And specifically the fact that it is possible wave 4 also means that there's a possibility that this market can take a lot more complex formation than we would generally expect. Like generally wave 2s are simpler to count the subdivisions. 4s are generally not that simple, right? So long story short, there is a possibility this market can just fall lower and go to these levels, marked levels, or even take support above it. However, I feel like 2600 or 2595, whatever you'd like to call it, is quite near, and there's a high possibility that this market will go there. Secondary counter view that I have of my own analysis is that I mean, all of this is my own analysis. Why I don't know why I said that. It's a funny thing to say, right? So secondary view I have is that this 5 is getting extended. So keep in mind a series of 5 wave completes an impulse. So we have this dot 1 here, dot 2, 3, 4, and 5, which completes this 3. All right. Now, the secondary hypothesis, as I mentioned, is that this 5 is not really done for. It's just a lower degree dot dot 1, which will then be followed by, who knows, maybe even complete here dot dot 2, and then further on dot dot 3, etc., etc. You get the point. There is no need to emphasize this too much. And as a matter of fact, at that point, this whole count will be redone because I can see something else developing here, but that's not really very relevant at this point. And instead of getting too much into theory, you get the point. If this is a nested formation, we can see strong breakthrough to the upside. However, we have no real evidence for it. I'll probably be interested once two of these alerts are taken out. And of course, the real entry is at the breakout above or break above the 2781 level. Right. However, I'll be interested in longs if I see anything above 276460, let's say. So 2760 plus, I'll probably look for some scalp longs, or at least check back this market again and do some short term analysis for possible entries or trades for the upside on gold. Otherwise, as you just heard me talking, there is a possibility of a bearish side. And do not forget this trend line. I think that was the trend line. Close enough. Let's draw it again. Yes. So, and keep in mind, we also have, other than the marked levels, support levels, we also have the trend line incoming. It's just kind of important that it is respected if this is a nested formation to the upside. If not, then we know what is happening anyways. So we are well prepared for both sides. But the sweet rally or the easy money is, I guess, unless there's a break to the upside, is not there anymore. Right? This wave 4 is going to trap a lot of traders, I guess, if it really is in play. And it can take a lot of time, maybe even. And after all that hard work is done by the markets, only then it will take off. So stay cautious. Not that great of a market for beginners anymore. More of a professional money coming in now, or strategies, I should say. That's about it for my discussion on gold. If you guys like the content so far, of course, do not forget to hit the like button. A lot of hours go into coming out with these small little counts, which look very simple, but let me tell you, it does take a lot of time. A lot of time. I mean, not always, but yeah, in general, it does overall. So, last thing before we proceed to the next chart, if you are enjoying this content, make sure you share the content with the friends, colleagues, or on social media, where we can get more relevant audience coming to us and appreciating the hard work we put up. This is the 140th edition of these webinars, and we have, after, I guess, for the first time, we have had two consecutive 1,000+ views within 1 week. But then again, I guess it was because of the US elections and strong wild movements in gold. So I don't know how this channel will work, or how long I'll continue it. I hope it does catch on. I've been behind it for so many years, but I request you guys do your part as well. Right. With that being said, I would now like to ask you guys, if you have any doubts or questions, just paste them in the comment section so that we can then check the live chat and answer them. And lastly, those of you guys who would like to catch my content live, we do have a private Slack group. How to enter it, the details are below. If you are completely new to the ways we are using Elliott Wave, and there's a free 13 video course, which is completely free, no registration required. You can again check the link in the scrolling part below, or the description of the YouTube video which you are watching right now. Right. And that's about it. I don't see any questions or comments, so I'll just look at the next. Actually, there is a comment, but I don't know what's the point. We are going to look at S&P's 500. Paris last, whatever that is. So, mate, we are not going to look at the ES chart. I do look at it, but I don't discuss it. What I discuss is the spot chart. But there is not much of a difference, anyways. So we'll go there. 1 second. Here is the discussion from last webinars on S&P's 500 chart. Let's see what was being said. So first of all, we were expecting a bearish count was discussed, which I think was expected below 5684. I'm pretty sure we had more of a bearish view. I personally remember my view was that this market should at least touch this wave 3 high. And there was a interesting discussion with one of the guys I was talking to on private call. And he was asking, what do you think about the elections? And my hypothesis was that this market at least should touch 5684 and then it can reverse. However, if the bias is exceptionally strong, in that case, it will show it by not even touching the minimum marked level, which is interestingly what happened, right? Anyways, so as we discussed, the bearish bias was discussed and never got triggered. And I don't remember if we discussed the bullish bias was not, or if there was one. Yeah, I mean, there was the bias that if it takes out the wave B high, then we are looking for longs, of course. And that is really what happened. So let's look at the live chart and take things from there. So this was the discussion on first. Yeah, there's the market on 1st of November. Our bias was that it will at least go and touch this level. And at this level, I expect a little bit more follow through, giving us some scalp shorting opportunities. Again, watch the whole webinar, the last webinar, by visiting the YouTube channel 50 as market analysis, and then you'll get a better picture of what we were saying back then. But anyways, that didn't transpire. The second setup was if a really strong bearish setup fails, then that generally leads to a really strong bullish setup. That's a general theory. We all know it. I have repeated it on and off, I guess. I don't really talk concepts much, I think. But here's one for you if you haven't heard it before. So this is a classic example of that. We had a news event, we had a theory, we had main theory or H1, let's say, which failed, and H2 became the main theory, and it blew through it. So we were able to take entries on this. Let's see where the entries. I'm currently still in long side, and let's see. Added minor longs, and let's check the actual level. 5891. So as you can see, it is in alignment with our discussion only at the break 5891. Actually, I was a little bit late as a matter of fact here as well. And incoming resistance support, sorry, resistance at 608, so it can be taken as our minimum target level, right? So our stop loss is at 5940. This is what we call a free trade because our stop is much higher than entry. So no matter whatever happens in this market, we'll take money out or some money out. Right, so 5891 and the market is at almost 6,000, very near to our target as a matter of fact. So yeah, now coming back to our counts and whatnot. So this is the count. Let me go and show you the whole drama. This is the point of reference. I am taking 38104H time frame data feed. This, keep in mind, if you are using a different data feed, this POR level will be a little bit different. Always keep that in mind. And we are at 3813 on this point of reference. From here on, I have marked an impulse in the upside. We have a 1 up here. And I'm not very convinced about my placements of the 4. Right, it's a point of discussion, not a point of discussion. I have created multiple hypotheses on it, so I will not discuss it here in too much detail. I'm just going to discuss the two views instead of going too much into theory. The first view is that we are seeing a 1 up, 2 down, and this is the strongest of the strong. So those of you not familiar what the stuff I'm drawing on screen is I'm just typing in Elliott Wave impulse structure, and impulse in Elliott Wave means 5 waves up. Within these 5 waves up, waves 1, 3, and 5 are fractal in nature. That is, if you magnify wave 1, you will find 5 waves inside of it. Same goes for 3, same goes for wave 5. Now, given the fact that the 4 is complete, the fifth is incoming, and the fifth, as I said, will have. Let's remove this. The fifth will again have 5 inside of it, right? So because there are 5 inside of it, it should be marked as 1 here, 2 here. Let's call it dot 1, dot 2. So dot 3 and 4 and 5. So you get the point. We are possibly having some impulse up as per this count. I will discuss another view in a moment here. So if some upside is remaining, there is another point now that comes into mind. If this is the wave 3 of the fifth, we also know that wave 3 generally are the strongest, fastest, and extended, that is bigger than 1. So we have some views about it now, or we can make some views about it now. First view is that it can be, or it should be, or is expected to be bigger than wave 1. So we expect it to be more than 484 points. Let's call it 500 or more points. And 500 or more points itself lands it to 6,200 plus is plusish level, or whatever the right term is or pronunciation is. Right. So if this hypothesis is correct, then this market has a lot of upside, 6,200 plus, and perhaps even 1,000 points. So add 500 here, 6,700, or who knows. You know how wave threes are, strongest of the strongest. But that's all good. When you are bullish, you want to see bullish counts, and that's the childish way to look at trading and markets. Short way to lose money, and who knows what else. So, anyways, now coming back to reality, that's just one of our hypotheses. Let's just call that H1. It does look strong, I have to say that. And but there is no point in trading if you don't know counter views, or if you can't think against what you think is good for you in the short term, right? Farsightedness. So, anyways, the other view I have is very simple. If the 4 is complete, 1, 2, 3, 4, 5, damn, it's done. And if it's done, it's done. It can just fall down under the sun, whatever. I was just trying to be poetic there. Anyway, so if it's done, it's done, and we will know it once we start to see. Let me remove this. Once we start to see a move below 5723, we will be cautious of this. Keep in mind, below 5723 is no confirmation of anything. It can still be a wave 5 in play with the wave 1 of 5, 2 of 5, and 3 of 5, so on and so forth. I'm just giving you an idea that if the H2 or bearish count is to come into play, then we want to see at least a move below 5723. It is not a confirmation of any sort. Excuse me. Not a confirmation of any sort, as I was saying, but just a sign that maybe we are seeing some weakness. But anyways, our short-term trades are still on, as I mentioned, with our immediate target as 6008. Of course, there's no 9 at the end. So 6008 or higher levels, perhaps even 6200 and even 6500, 6700 are possible. So super bullish on S&P is 500, and for the time being, as per our H1. And even if in H2, we'll just keep drilling until the fifth leg is complete. That's about it for our discussion on S&P. I think I took a little bit more time than what I wanted to devote on S&P's discussion. But then again, if you guys liked the discussion, of course, make sure to do your part, hit the like button, and much more importantly, uh, hopefully we keep that flow of 1,000+ views on every webinar coming. And it's all possible if you guys share the content and help us reach the right audience, right? So kindly do your part. And with that being said, let's now head over to our last chart. Great discussion. Thank you. You're very welcome, Jeffrey. Hopefully you are one of our viewers who will push our content to the right audience. I think Jeffrey is also a part of our private Slack group. Yes, he is. Anyways, so now let's head over to our last chart, which is the chart of Nifty 50. Let me load that on screen. Here it is, Nifty's chart, and let me check what was being discussed on this chart in our last webinar. So here is the recording from the last webinar on this chart of Nifty 50. And let's see what was being said. So as you can see, I think, not very convinced with this this up leg. I had a bearish view in mind, and I think I pointed out very clearly. I'm just checking if there was any strong counter view. Yes, there was no counter view or strong counter view, I think. So my main view was that I'll be looking for shorts below 24073, considering this as an ABC XABC structure kind of uh, WXY or a complex, right? That was it from our last discussion. And the price at the time of discussion was 24300 something. So let's now look at the live chart or the last known chart. This is 1st November. Where is that? So our discussion was on 1st November. There it is. 1st November. Where it is? Where it is? Where it is? Where it is? Yes, there it is. 1st November. So as you can, the market next day itself broke below our entry level, and it did exactly as per the count. As you can see, I have already posted the count. We already discussed the WXY. It literally did the W down, X up, and the Y down was in play, and the market literally did everything as we discussed. However, I have to say this was not the kind of market you could trade. The market itself opened gap down a lot, so there was not much of a price action movement you could make without risking a lot. Keep in mind, analysis playing out does not always equate to you making profit out of it. Sometimes the analysis is picture perfect and everything has worked literally as projected. But because of the fast pace of the movement, you may not have been able to make much out of it. Unless, of course, you are putting out option strategies, hedged option strategies like spreads or something like that. And I mean, you have to have foresight for it. That is, I can do it. And I was actually in on some spreads, but they were in the constituent stocks other than the index itself. So, anyways, what I'm saying is that I was right on the analysis. I saw it. I discussed it in front of you guys, as you just saw the last webinar's recording, and I did not take this short anyways. Instead, I took some shorts on the constituent stocks, and I'm still short on one of the stocks. I will not name it. I don't want to discuss all that. But long story short is analysis always does not play out as simple or easy as you may think. You need to have a much greater understanding of the index, the constituents, the relationships, which is leading, which is lagging, and then you can make something out of it. It's one of those cases where true knowledge really does stand out. I mean, where does it not stand out? What a stupid thing to say. Anyways, so coming down to the analysis, the primary hypothesis holds W down, X up, Y down. I'm not very convinced. As you can see here, the Y is not very convincing, and brings us to our another alternate view. What you call is PUR placed at 26273, and perhaps, who knows, maybe this can be counted as an impulse. Actually, it can be. And if that is the case, then that is what we can possibly be seeing in the coming sessions, right? Much, much, much more downside. Now, don't hold me to it. It's just the, let's call hypothesis 2, because it is definitely looking very strong. But keep in mind, this wave B or 2 may still be continuing. This whole thing may just go further within this box range. Who knows? Maybe test this whole level. You can see there is a congestion level incoming here. I'll just draw it with a different color. So we may be testing this range to the upside. I can be more specific here using my detailed analysis. It's pointless. The whole point is that either the market will fall from here directly, it can go up within this range and then fall, or it can just do completely the opposite of all this and just continue going up from here. right? All three possibilities are possible here. So what's the play here? The play here remains, and as I repeat, you need to have information or understanding of the constituent of this index. Only then you can make better plays with the index analysis. Index analysis is not always supposed to be traded with the index analysis. You need to have the internal knowledge, as I said. So in this case, the idea remains, for weaker stocks, I'll continue to hold short positions, right? And on the index itself, I'll personally look for shorting somewhere below 23,940, let's say. Below 23,940, I'll be interested in holding or looking for some short plays, right? And as I just mentioned, the possibility of upside is real and actually not very weak. Hence, keeping that in mind, if I remove everything, we need to keep this possibility in mind at all points here. That one leg up may still be remaining, which will or can take the market about 24,523. So, long story short, on Nifty, the bias remains from a swing perspective bearish. Even if the market takes about, what is this, 24,523, it still remains bearish. Only above 25,250 can we say that from a swing perspective, maybe, just maybe, we are now super bullish. So, that's about it for Nifty. I discussed all the major levels and my projections H1 and H2. And I think that's about it. We are done with this discussion of the 140th webinar. Hopefully, you guys like the content. If you did, make sure to do the like and share, etc., etc. And for those of you guys who have been sharing and liking the content, I am very appreciative of you guys. As you can see, we have indeed crossed 1,000 views in the 137th webinar and 139th webinar, which is exceptionally good, right? So thank you for all those guys who are doing your part. And again, those of you who are interested in more of the quality content, you can request details for the Slack private group. We post all the trades, analysis, etc., here live, and how to join it. The request can be made by clicking or using the link, scrolling right below your screen, or using the link in the video section of the YouTube videos. If you're watching it on YouTube, if you're on LinkedIn, you will still find the link in the description part, or whatever LinkedIn calls it. So thank you for guys who stayed till the end, and thank you for sharing and liking the content. Really appreciate that, and I'll see you guys in the next one, guys, and take care.